Okay guys, should we get started? Okay, so hope you guys are all well. This is going to be the last webinar you've seen from me this year, and I think I'll be back in a few weeks. Give you a little Christmas break in here. I need a little break. G'day Boyke, how you doing? Hello David L. It's the David L I know. Is the other David L here? Not yet. David L1. Evening, sir. So, gonna have a few weeks break after this, sort of Christmas, New Year, and all that sort of good. Rani, how you doing? Kia ora. So this is how we're going to finish the year, guys. We're going to talk about a problem that I'm seeing that I've experienced before and sort of managed to change, and a problem that I've seen a lot with the people that I coach at FX Bootcamp, and that is pretty much these. If we just not going to really look at charts as much, but it's sort of more going to be drawing and theories. But how often do you guys put your hands up in the room, get yourself, or pick direction for the day, i.e. you're doing your analysis, man, we're coming down for the day. This euro looks short. And then at the end of the day, it's come down a good 200 pips or whatever you thought it was going to come. And you've got absolutely nothing to show for it. You've even had a losing day. Many of those people in the room? And it's a continuous week in, week out, almost sometimes day after day. I think it's one of those common problems with traders, isn't it? So, yeah, what often happens, I'm finding, guys, especially in the Forex markets, and when things can be a little bit volatile. G'day, George. Yes. When things can get a little bit volatile, you've got to sort of change things up a bit to make sure that you're going to get yourself into some of these trades. If I just show you say a 4-hour chart, well, you can sort of, if you get handy at analysis, Rani, you're gonna be able to pick direction, and this is a little bit of a goal for the more novice trader, okay? You're going to be able to pick direction, a fairly high percentage of the time. I think if you can pick direction for the day 70% of the time, you're going to be in awesome shape, okay? So, if we use, I'm a big fan of price action for determining direction. So if we just looked at this euro chart right here, you can see the 4-hour chart just making these sort of lower highs and lower lows. They're just stepping its way down. It's in a downtrend, right? So if I said to you, if every one of these squares here was a day, which it is on a 4-hour chart, most of these days, based on the price action, if I said to you, what's the next day going to be, you could probably, while the 4-hour is downtrending and we're in this longer term downtrend, you can probably more often than not predict that it's going to be a down day. So, the day's highs and lows are going to be lower than the previous days, okay? And that's all very good until such time when you pick direction and it comes back to the resistance area where you want to short it from, you fail to get in it and it comes down. And you even might in some cases take a loss trying to get on board with it, okay? So what often happens, I find, is if I just take a pen for now, we'll go look for some live examples. Albert, sideways, so you're sitting on the sidelines. Or you're changing the fractals. Okay, we'll talk about this. You're changing the fractals, and then you can still trade within them. I've actually, the last 3 days, actually had some pretty good trading. But we can take a look. It's just changing to lower time frames and sort of more scalping a few spot trades and stuff, okay? Now, the most common thing if this is a 4-hour chart here, and we'll as we're sort of USD strength right now. We'll focus on that as an example. You know, if this is a 4-hour chart swinging down, okay, making these lower highs and lower lows. You guys can see my charts all right, by the way? Just had a reset on one. Okay, that's fine. What we're normally doing to continue the trend, okay, is we're looking for like a 4-hour swing, pullback, and continuation. Okay, this is probably one of the most common things a forex trader is looking for. You know, it's an intraday pullback, down we come, and we're looking to get sort of, you know, that 150 to 200 pips or whatever that's on offer on a good day. Okay, so you know, you might sit down in Asia or London or New York and do your analysis, and you realize that, man, in this yellow area, if we get back there, there's a daily central, there's role reversal, there's an EMA, there's a psych level, there's a central pivot, and all these things are there. That's where I'm going to take my shot. You line yourself up a trade plan, don't you? We get back here, we've done our analysis, and we're looking for a trade plan. Now, the trade plan hopefully needs some level of confirmation. Okay, whether you take a cheeky shot on a 5-minute change of trend or 3-minute or 15, it's completely up to yourself. It's all about how much you want to, how aggressive you want to be and how much risk you want to take. Okay, but if I draw in green the pullback and the 15-minute change of trend, I'll draw what something you might look like in an ideal world. Okay, so let's say in this last 4-hour swing, price is coming down, and then it swung up in Asia maybe. Okay, and you know, somewhere up here it double tops and does something like this. Okay, and this area in this blue box is exactly where we wanted to short from. Okay, and so we pull back, the trend is changing, and that's, you know, we're looking for our confirmation, something like this, pull back down to get into our trade, and then we're hoping to get the trade up a little bit, drop the stop at break even, sit back and watch it fall through the floor, and give ourselves high fives all day while we go and make 150 to 200 pips. That's like the number one plan goes perfect, right? Make a trade plan, you get in, and down she comes. Unfortunately, it's not always happening like that, is it? How often is that happening for you guys? It used to happen to me fairly regularly. It doesn't happen all that regularly anymore. Hence this webinar. Hence why I'm passing this information on. What's usually happening, if back up in the blue box, and I'll change color here, up in the blue box, we're getting different sort of situations, especially around market opens around New York or London or something, where price is coming up like we wanted, okay, and then it comes down like we wanted, but then it shoots up, makes a higher high, and then goes and does exactly what we want. And what most of us do is we're taking that number one trade plan, we're taking a loss because our stop loss is, you know, above the higher highs here, and then we sit back sort of gasping like, but it rolled over at resistance, perfect timing, and all that sort of stuff. You know, what do you mean I'm not in that trade anymore? And you sort of sit there like a deer in the head, looking in the headlights, and off she goes. Falls through the floor, and you sit back. Suddenly it's 70 pips from from the entry and you're not in it. Is that common? How common is that? Always. Fairly common for you, Noda, yes. So, what are you going to do to get around that? What can you do? Any ideas? This pattern, I'll draw the same pattern bigger. So we're swinging up. We look to be changing trend. And that's what we want, the perfect trade plan. But we get this alternate one. Very common around market opens. We actually come up, okay, and we sort of go higher high and then roll over. Okay, all at resistance still. You know, this used to happen to me all the time. Resistance, okay. So what I used to do, what I'm doing now, I should say, is I'm still taking this trade plan here. We'll call it number 1, which is that assuming that it's going to be perfect. Okay? Assuming it's going to be the perfect trade plan, because you never know. I mean, you would hate to wait for the higher high like this. You'd hate to wait for the pattern in blue to have it not happen at a London Open and then you're not in it. No, well, you could try that, David L, if you wanted. I'm rather like this. Beef up your psychological skills. I'd rather take trade plan number 1, and if number 1 fails and it makes the higher high, I'm looking in this area where I'm putting the red box for because I'm expecting resistance. Because remember, as I was explaining to Rani at the start of this webinar, if you're very good at your analysis, you can trust it enough, like 75% of the time, you'll be fine. What you're finding is you're good at picking resistance. In this case, longer term, it's just the timing sometimes and the getting in is the problem. It is a possibility, Crystal, okay? But in the red box, I'd be looking for like a 3-minute change of trend or something with another little higher high stop. And I would take the shot again. Okay? And especially in the current markets right now, probably in the last few weeks, do you know how many times I've seen this set up on like a 15-minute chance? Do you know how many times I've taken this, lost say 15 pips here, taken trade number 2, we'll call it, on the little higher high break, the rollover up here, and turn that into 100. Do you know how many times that's happened in the last month, say? I can probably count it on both hands. And if this is going to continue going up on the London Open, it's going to, like through here, I'll just draw and I'll override it in pink. This is just going to go without us. This is going to London's going to bring the money in, it's just going to reverse, and we're not going to get in the trade. Okay? But if you trust your longer term analysis and direction, be open to the fact that number 2 is going to happen to you. The key is, can you get back in it? Is getting back in it and surviving the downside. Okay? It's a weird feeling, oh my God, I've just lost, and now minutes later you're telling me to take the trade, getting another trade in that direction? Man, that's weird. Why would I do that when it's breaking a higher high? Well, it is breaking a higher high, but remember the long-term direction is down. And if it rolls over and shows you some direction, go take yourself a little shot. Look at this here on the Euro today. It sort of gives you a little bit of an idea. See here, resistance, where I'm putting the arrow. And we did, I'll highlight in red, we did try to change trend here to the downside. So lining up this trade plan short is valid. That's a change of trend, okay, at resistance of the downside. So that would be, in a 15-minute chart, a number one of what I was just explaining. Okay, what happens? Breaks a higher high. Thank you. And then proceeds to roll over for the rest of the day. And what do you know? We're still down. Anyone try the short at number one today? Get eaten, then sit on the sidelines and sit back and watch number two go the way they wanted. I managed to get number two straight away because I missed number one because I was sleeping. But I woke up and saw number two and saw, whoa, central pivot, oh, open of New York. Oh, and this sort of thing on a, I'll show you on a 3-minute chart what I was looking at. This sort of thing here, you know, this is the move after, down, lower high, lower low. That's a change of trend. This is the previous set of highs. So I just lined up that there and then took that one. So getting back in that trade in that direction, finding it happens so often, guys, that you need to take note about it. Okay? You can't afford, as a trader, to sit on the sidelines, have direction for the day, get knocked out with a loss, and sit there and then watch it proceed in the direction you want it. Well, your price action will tell you longer term, right? We'll cover that off in a minute. Let me just explain the third scenario. There's three, okay, and then we'll go back to your questions. So we've got number one, which is the works perfect. Number two is it breaks a higher high and then rolls over. Number three is something like this, where we're predicting a short. It rolls over. It goes off in our little direction. Thank you very much. Comes up, knocks us out, and then goes on its merry little journey. So you might take a trade here somewhere, okay, and we'll call this trade number 3. You know, London opens, off it goes, or, you know, leading up to London open, off it goes. London open here, comes up, knocks us out of our break-even trade because we had it up 30, 35 pips. You know, if I'm spot trading, I'm always going to jam a stop at 35 pips no matter what. Comes up, knocks us out, and then rolls over and proceeds to go in our direction for the day. And this leaves us scratching our heads all day about, oh, what if I left it longer? What if I you know, took it later and just waited for that London open? Well, you don't really need to. You just, if you get knocked out, you're just so confident in your direction that you're going to look for a short-term change of trend where I'm putting these arrows that's going to confirm that actually maybe we're just fibbing this drop and we're going to continue on our merry little direction. That to me happens all the time, especially around market opens like London or New York or the stock market, where you might, you know, in that sort of London lunch session, you might get yourself into a little trade at resistance, off it goes, stock market opens, you're up 40 pips, comes up, knocks you out, then rolls over and then comes down 100 pips. You sit there going, damn it. Had the direction right, it just wasn't my day. You know, it wasn't your day, but you know what? You can actually get into stuff. And I think it's very important to understand that you need to jump back in on these in the direction you've got if you want to consistently make profits. Sure, it might mean a few more losses here and there, but winners should way outweigh losses in terms of pip value, right? And so that's sort of 3 examples of what's been happening in my trading and getting feedback from boot campers. And just by making those small adjustments and jumping back in, being able to profit quite nicely. You know, in the past, and I was talking to a boot camper tonight. I got a boot camper that was up over 60 pips in Asia yesterday. Ended up ending the day minus 50. I'm like, how can you be up 60 pips at one stage and end up minus 50? I'll show you what they did. Tisk. They were in this short through here. Nice trade. Believed it was going forever. Okay. Got knocked out break even. Okay. And in this blue box here, just got so frustrated that they shorted, they longed, they did everything under the sun, and ended up, you know, taking 3 losers and losing 50 pips for the day. You know, if they just said, you know what, okay, break even trade. Now I'll line up trade plan number 1. Down it comes. Okay, maybe a 12 pip, 15 pip loss. Okay, fine. Line up trade number 2. Down she comes. You know, they're up a few pips now. They're up like 40 pips. 35, 40 pips. Well, okay, it's not 65 like they were earlier, but they're still in the direction, they're still in the game, right? So these examples are sort of trade plans 1, 2, and 3, where they've sort of got in a trade, got out break even, and then, you know, in this blue box got a little bit beaten up. Well, they should have just stuck to their direction, their longer term direction, and gone down the road of it's almost like anticipating, and it's sort of an experience thing. Another reason why I'm passing it on, because I see it all the time. Anticipating how price can react at resistance, mixed in with market opens and all that sort of stuff, and just being prepared for any of those situations that can happen, and being able to still benefit from no matter what is thrown your way. Okay, it's like a good batsman in baseball or something. No matter, you know, a good batsman, no matter what they throw at him, he'll still, you know, he might strike out a few times or something, but he will eventually work you out. Or on the other hand, a good pitcher. Okay? So, yeah, that's what it's like with the trading. Now, one of the good things I like about it, it's completely fractal. Again, you can use it in long-term analysis, for example. I'll try to find an example here. This sort of thing here, you know, you might believe, yeah, we're down, pull back, we're down, okay, we're down forever, comes back, knocks out any shorts and continues. Well, that would be trade plan number 3, but on a 4-hour chart. Yeah, I mean, you set up, you know, yeah, exactly, Albert, and you're setting up like, if you're setting up a spot trade on a 15-minute change of trend, you'd use like 15 to 20 maybe or something like that. But if you're going shorter, you might use 10 pips or something. Okay? 8 a.m. Eastern, David L. Eight, not 7, right? Okay, so I was going to ask the question before, how do you know it's not sideways? Okay, so now, if we go to the 4-hour chart now, I would consider oh, that's why you're so wrong all the time. I would consider the blue box to be sideways, because we're sort of we made some higher lows and higher highs, but now we're sort of back to some lower highs, higher lows. Okay, so we're a little bit sideways in here. So based on what I was explaining before, you might take a 4-hour swing, pullback, change of trend short, looking for that sort of pattern. That isn't going to be valid today, is it? However, you can always do something like this. Okay, if I make this a 15-minute real quick, make this say a 3-minute. You can always, it's all fractal, guys, so you can come into this chart now on the 15-minute and say, well, if the 4-hour is sideways, I will just trade like the 15-minute move fibs until otherwise, the 4-hour proves otherwise. So I can always say, maybe if you're a bear today on the euro, you can take this a red zone, a sell zone, which I would say is somewhere through here, maybe 130.20, 130.25. If we rolled over on a 3-minute chart up in that red box, I'd be interested in a short. Okay, and if you're a bear, you will look for those 3 scenarios I told you, but on a 3-minute chart. So, like the first examples I'll show you is like a 15-minute change of trend. Well, you can mix it all up and like scalp your way in on a 3-minute change of trend in here. And when it changes trend, you'll look for that perfect setup, and if it gives it to you, you go. If it gives you oh, we're rolling over, oh no, we're not, it's the first sign of rolling over again, you'll take another little shot at it. And likewise, if you get it up, 15 pips of profit, move your stop to break even, and it comes up and knocks you out, but then looks like it's rolling over again, don't be afraid to take another shot at it. Okay? You can trust resistance in shorter fractals and things just the same as the longer. Okay? It's all about just trusting your analysis and all those sorts of things. Okay? Likewise today, because we're sideways and we're waiting for things to break out, you might look at something like, well, what if the euro did this today? We sort of came up here and off we went. Well, then you might look for a green area to buy later on or tomorrow, back in this sort of area based on a fib of this rise. We're coming off some monthly pivots and things, guys, so this is very possible what I'm drawing here. And then when you get back down into the green box here area for longing, at support, you're going to look for the same thing but in the opposite direction. Hopefully it rolls over on your short-term time frame, 2-3 minute chart, whatever. Off it goes, take your shot, works perfectly. If it doesn't, you know what to do, correct? So it works all fractically, and you can even mix it up and go, oh, what if a daily swing pulls back? What if we came up to here in the next few days on a daily chart? Hang on, where's my arrow gone? There we go. What if we came back to say the daily 21 roll reversal resistance up in this 132 area? Well, if you get like an hourly change of trend with an hourly, exactly the same ideas will work. It's all fractal. And if you like trading a little bit longer, just wait for an hourly change of trend. Hopefully it's going to give you the perfect setup. If it doesn't, and it gives you the little higher high first, You know what to do. Is that clear to everybody? I can't overemphasize how important it's going to be to survive as a trader, to be able to jump in on these scenarios. You can't afford, if you've picked direction like this and you fail to get in at resistance, you're pretty much going to sit there all day twiddling your thumbs. And that, I mean, psychologically, and it's psychological, sort of psychology is where it all sort of wraps around it all, right? Psychologically, you need to be strong to be able to get back in a trade if you take a loss. Now, hands up who finds it hard to get in a trade. You know, let's say you get that classic scenario. London, it looks short, London's opening, it's rolling over, you take a shot, knocks you out with a higher high and then does it. Psychologically, it's hard to get back in the trade for a lot of people. Oh, but I'm not going to, that's sort of out of the scope of this webinar. But futures, big players, not really my scene. Not liquid enough. Right? And so psychologically it's hard to get back in the trade, but just the psychological, what's worse? Think to yourself, let's say you lose 20 pips on an entry at the Open of London. Is risking another 10 pips worth it to watch it come down over 100? Or are you going to sit there and watch it come down and get even more frustrated, which is going to lead you to revenge trade a lot more to try and make up for the fact that you're not in the trade? Because that's the difficult trait that we face, isn't it? Is you pick direction for the day and sulk in the corner, David L. Yes. You sit in the corner. Sorry. I've got David L. and his teddy clutching his teddy in the corner on my mind. You take a loss, you sit back, you watch it come down all day. Psychologically, you're very frustrated. And then the next day, what do? Tend to come back and sort of try and push things a little bit, try and revenge your way back into that trade that you never got. Would that be a fair assessment? Yeah. I've been there, 100 times. Easy. Where I've spent all day moping and just frustrated that I picked direction, I waited, spent all my day waiting, that set up, I did not get in it, and I got nothing to show for myself. And you've got to overcome that, otherwise you're never going to, you're going to struggle to make it, let's put it that way. Okay, any further questions on that? Now, if you're, of course, I would always recommend everything right now, if you're wondering about my view on anything specific, guys, is we're all a little bit sideways, and I think the chance of going up, there's as good a chance we're going to go up today as down. And so I'm just sort of sitting on the sidelines waiting. But I'm not in any hurry to get into anything right now. Basically, the US dollar is sitting at a whole lot of resistance. Exactly. Okay. Now, I would always recommend what I've just explained to you is done on a demo account. Okay. A fantastic way is using the Forex tester. If you don't have Forex Tester as a trader, I suggest you go and buy yourself a copy. Because that simulates the perfect world for a trader. I think it's sideways at a monthly M1 Anil, and that ain't good. Okay, not too many people look at these. I'll show you while we're talking. So I would be definitely trying what I've explained to you guys on a demo account. I swear you will benefit from it. Absolutely. This is going to be hard to break, guys, on the euro. And your Swissy's the same. And so is the dollar index. Hence, I think we, like on the Swissy, could be coming back here. And then January comes, and then maybe that. Now, I know if you think it's a bear flag, trade it accordingly. Okay? By the way, guys, if you've got anything specific that you want for webinars next year, robertfxbootcamp.com, and we'll take them into consideration for our subjects in next year's webinars. Now I'm starting up my Barocco dollar index here, but if you wanted one more little piece of proof that we might not go much further in the direction of USD strength, to me that's gone to extreme monthly pivots. We don't need to go any further there. So the longer that we wait down in these sorts of areas here, the longer I think we're going to go up. In fact, this here, watch this pattern, guys. If we go up, do not be surprised. See, this is what I was meaning before about fractal. This is a change of trend on a 4-hour chart. Okay, so people who are bulls might have been trying to long in any of these sort of areas after the change. Okay, we could quite easily pop down here for a day, just one more little lower low, and then just hello, off we go. So how would you deal with that as a trader? Well, already as a trader, this is how I think, all right? If you're wondering how someone like myself might think, is why I think that's support, and the perfect trade is we sort of go sideways here and do that. That I'm open to this happening as well. And then that. But because of the support in this green area, because of the monthly pivots, I'm already thinking of the patterns that I could look at that are going to get this long. So even if we continue down to something like 129, 129.50, I still think this area up around 132, 133 is where we're going to go. Okay, so the green box is the area. It's exactly what I was explaining before, but just looking at it on a 4-hour chart. So which means that if I pop down here to this yellow area, okay, and got like a daily extreme pivot, something like that, and it rolled over on a 15-minute chart, I'd long that. I'd long that thing right there, and I would probably target 132 to 133. Because it's all about the longer term setup and the change of trend pattern at support. Does that make sense? Did I lose anybody there? Because it's very important to understand that. There is bucket loads of monthly pivot support here. More often than not, that will hold. Okay? But there is an incredible chance that number two trade that we're explaining before will take place. And even a number 3, which would be something like this, where we could come down here, we could hit up, okay, come all the way back down, knock out anyone who's long, and go again. Okay, so this just happens to be on a 4-hour chart, and in every one of these little areas here, you'd be waiting for your change of trend pattern to take the long side. But by the looks of what's happening in the last few days, there's as good a chance as any I think we could truck on up here. Okay, and if you start seeing, this would be the next thing for me here. Break this. That's going to be higher low with respect to the previous day's lows. Higher low for today, breaking this intraday high. That's going to have us thinking this, isn't it? And in this yellow box, 3-minute change of trend, using those 3 options that I showed you. Maybe something around New York Open or something. Might be valid. Okay, so there's something for you guys to think about. Sometimes it's about, you've got to be building your trade plans in advance and anticipating how the change of trend pattern might happen. Okay? And I think it's just as important on the longer term stuff for analysis as it is on the shorter term stuff for trade entry and setup. In fact, it's probably more important on the longer term stuff because people get trapped into believing like a daily chart's going higher. If you see this pattern here on a daily chart, it's swinging up. Whoa, we're coming down, and then it does this. People believe that it is going up, but this is probably a very important factor here. If there is resistance here, lots of resistance, because maybe this is a wet pullback on a longer term, even longer term chart, like a weekly chart. Most cases are going to come down. Okay, it's just the change of trend pattern is just not formed in the standard manner that we'd like. Okay, so I'll leave that with you guys to think about over the holiday period. Very much worth putting to the test, guys, I'm telling you. It's helped me. It's the one thing that's helped me as a trader, especially in the last 6 months of the year where we've got a little bit funky with some of these pairs. And it puts you in good stead. If you can get the recording of this webinar and work on it a little bit, it will make a big difference in your trading. Okay? Have yourselves a good holiday break, guys, and we will see you in the new year. I'll have a good holiday. You make sure you guys do too. It's a good time to reminisce on your year's trading, guys, and maybe not trade as much, but just jot down what you want in 2012. Have a good one. Cheers.